All right. Good morning, good afternoon, depending on where you're tuning in from. Welcome to our weekly mobile coaching stream. My name is Patrick France, senior instructor here at VectorVest. Glad to be with you all. Hopefully everybody is doing well. Good morning, John, Drew, Jay, VV Nation in the house. Glad to have you here. We should be live both on Facebook and on YouTube. So if you guys can hear me out there, start spamming VV Nation into the chat. Let's get that going. Let's get everybody awake, alert, get those fingers working here this morning. So once again, welcome everybody. My name is Patrick France, senior instructor here at VectorVest, and this is our weekly mobile coaching stream where we talk about how to get the most out of the VectorVest stock advisory app to improve your investing and make sure you're successful in the market. So, today we're going to be talking about managing stops, some general criteria, some rules of thumb you should potentially be following, especially in these crazy times, to make sure no positions really get out of hand. But as always, first and foremost, we start off by taking a look at what's going on in the market. Then we'll dive into our topic of discussion. And then as always, we'll save the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. Good morning, Robert. Ramor, good morning. Hopefully you guys are doing well. Good morning, Raymond. Glad to have you all here this morning. So just waiting for everybody to get in. We see people slowly trickling in. I don't think the alert's been sent out yet. Just keeping an eye on that, waiting for the alert to go out. But as you guys are coming in, as always, don't forget, if you want to show your support for the stream, if you like what you're seeing here, if you like the education that you're receiving here, make sure, as always, smash that like button. Subscribe to the channel if you're not subscribed. And if you are subscribed, make sure to click on that notification bell, because starting next week, we have Trading for Charity, our second annual Trading for Charity event coming up. And the more people we tell about it, the more people we have, the better it's going to be. So make sure to have those notifications on. Make sure to tell all your friends and family to come hang out. I'll be doing some live trading, doing some day trading most likely, possibly some swing trading, depends on what we can find. And then also answering any questions that you guys have regarding your own portfolios. And then, at the same time, raising money for a tremendous cause that is Levine Children's Hospital. So make sure to come around, hang around for that next week. Starts off on Tuesday at noon Eastern on the YouTube channel. We're not going to be dual streaming. It'll just strictly be the YouTube side. But it'll start on Tuesday at noon Eastern, and then also next Friday at noon Eastern as well. And we'll be going every Tuesday and Friday up until December 2nd. So you won't want to miss out on that. It's going to be some great opportunities for you guys to win some amazing prizes, and also learn more about trading, and maybe even take advantage of some of the trading that we'll be talking about or we'll be doing live on stream. So I look forward to seeing you all there. Hey, good morning, Tyler. Hopefully you're doing well. Okay, so with that, let's go ahead, jump right into it here this morning. So right now, the major indices are rebounding a little bit from where they were earlier this morning, where the Dow is now up about 1%. The NASDAQ is up 1.25%. S&P 500 is up 0.8%. The VectorVest Composite up 0.7%. So with that market action, that has pushed our needle one tick into the green. Therefore, the color guard is mildly bullish, and VectorVest advocates caution when buying stocks at this time. As always, if you ever want an analysis, a quick snapshot of what's going on today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day, make sure to stay tuned to the daily color guard report every single night, where we recap all of that and essentially keep you on top of what's going on in the market and make sure that you never get caught off guard with any moves that are potentially looming in the future. So you don't want to miss out on watching that video on a nightly basis. And then as we scroll down just a little bit more, so as we know, the market timing gauge that we just saw gets its colors from the top row of lights in our color guard here. So the gauge was pointing one tick into the green, and as we can see, we have one green light appearing in the color guard, and that comes from the price column. The price is referring to the price of the VectorVest Composite, which is an arithmetic indexed average of about 9,200 stocks that we currently track in the US market. This will give you a better representation on what's actually going on in the market to make sure that you're getting a full picture of the overall market rather than just looking at small subsets such as the Dow's 30, Nasdaq's 100, or even the S&P's 500. And since it's green, that tells us it's moving higher day over day and week over week. The next indicator we look at is the RT or relative timing, which is looking at the short-term price trend of the overall market, and it's cast on a scale of 0 to 2. So since it's below that level of 1 currently, that tells us the short-term trend of the market is still down. Then last but not least, we look at the BSR, or the buy to sell ratio, which gives us a good sense on the overall health of the market. When there's more buys than sells in the database, then the buy to sell ratio would be above 1, which would indicate overall market strength. And when there's more sells than buys, the buy to sell ratio would be below 1, as it is now 0.16, which indicates more sells than buys in the database, or overall market weakness still. And then, so the trends of these three indicators are comprised to come up with the MTI, or the market timing indicator, which is looking at the underlying trend of the market. And once again, it's going to be cast on that scale of 0 to 2. So since it's below 1, that tells us the underlying trend of the market is currently down. Do you buy now? No, Francisco. I will be buying on Tuesday during our Trading for Charity event. So make sure to head on over there next Tuesday and come hang out with us for that. The Color Garden video available in the iOS app? Yes, Sadiq, they are. So everything right now, I am logged in and I have the account set up just for strictly mobile. So everything that you see here is included in the premium mobile version. So therefore, yes, you'll be able to get the Color Guard with just the mobile as well. Hey, David, thank you for that. Hopefully you're doing well. All right, so after the MTI, we then get to the trend column, which shows two parts of trend each and every day. Now, the first part is referring to what we call the primary wave, which is just simply the short-term or weekly trend of the market. As we can see, it is up since the price of the VectorVest composite is higher than what it was compared to 5 trading days earlier. The second part, just looking at the MTI. So since the MTI is below that level of 1, the underlying trend of the market is down. And then last but not least, we take a look at the calls column, which stands for our confirmed calls. And our confirmed calls are our most conservative timing system. They're our last signal we get to get into the market and our last signal we get to get out. Therefore, you never want to ignore a confirmed call change. Right now, though, since the markets are just starting to show signs of a potential turnaround, we still remain in that confirmed down situation as of today. All right, now, pro tip number 1. Whenever you're getting ready to buy a stock or buy a contra ETF or short a stock, you always want to make sure you take a look at the advanced declines here at the bottom and look for a 2-to-1 bias. So if the markets are moving higher like they are now, we want to see twice as many stocks advancing and declining, because that tells us the probability is in our favor that if the stock that we bought here today to take advantage of the up move, the probability is in our favor that that stock is participating in the market and will continue to move higher, therefore giving us a nice little cushion baked into the trade right out of the gate, which takes a lot of the stress or the emotional aspect out of trading. You know, nobody wants to start off in a trade in negative territory. So starting off with a little bit of cushion in the green is definitely a positive to get you started in the right way on the trade. All right, so let me make sure. Cool. For some reason, Facebook wasn't updating, but there we go. Now I can see everybody. Jay coming in, VV Nation, Randy, good morning. Wahid, good morning. Casey, I lost $50 in all stock. Well, what? Don't really know what to go off of on that one. All right, so let's talk about our topic of discussion here today. Managing your positions. Right now, we've seen the markets having significant drops. Actually, let's just go take a look at it. We'll go to take a look at the VectorVest composite over the last 6 months. We saw the significant drops coming in right to the summertime. Then we saw a nice little rally throughout the middle of summer, followed by a continuation of the downside. And now we're starting to see the markets gyrating sideways, really trying to look for direction. You know, we could see them potentially start to head lower, or we could see them start to turn higher. So, you know, right now we're just in some consolidation. And Muhammad coming in as a new subscriber. Welcome, Muhammad, to the VV Nation. Glad to have you here today. So with these bigger swings, especially now that we're starting to see more volatility in the markets, you know, instead of steady uptrends for a few months, steady downtrends for a few months, we're seeing a few days where the market blasts off and rallies a few thousand points. Then we're seeing it reverse course that a few days later and drop by 1,000 or points or so. You know, so with those kind of swings, if you're not careful, you can end up, getting caught off guard. You see, let's say you took a long position because the market was starting to blast off. You had some decent gains. You didn't follow any rules for money management. And then all of a sudden a position comes back down and then you start panicking. You sell it at a small loss, but then it comes back. So instead of dealing with the emotional aspect of trying to figure out, should I sell it now? Should I buy it now? What should I do? Let's go over some rules of thumb for everybody out there that you should be able to follow to help, help you navigate this volatility and help you adjust to be able to make sure that you're locking those profits in rather than getting whipsawed and then closing it out at the loss instead of taking some of those small gains. I think we're going up. Enough of this down. We'll have to wait and see, Bill. Happy Diwali Day. Thank you very much, Ravi. All right, so let's talk about these. The first rule of thumb that we typically go over is what we like to call the 1% rule. Simply stating that, you should never lose more than 1% of your overall portfolio value in any one position. So for example, let's say you had $100,000. Well, you take that $100,000 and you divide it up into 10 stocks evenly. So that's 10,000 apiece. So therefore, 1% of the 100,000 that you started off with is $1,000, which is the equivalent of 10% of that 10,000 you put into each individual stock. So therefore, your initial stop loss right out of the gate, once you open that position up, you should never let the position go down more than 10% before cutting your loss and moving on or just reevaluating the trade. Obviously, you could do less than that, but no more than that. That way, if something dire happened, if we woke up one day, the markets were down over 1,000 points each, that way, the most we would ever be susceptible to lose is 10% of the overall portfolio value, which is a lot more manageable than some of the losses I've seen when working with customers over the years or working with subscribers over the years. So just simply following that one rule of thumb will help you mitigate your maximum loss, and you'll know right up front what your maximum loss is right out of the gate. So there's no questions, no second guessing. Nothing has to be done. You already have that plan in place. So, if you wanted to do 8%, 6%, that's fine, but no more than that 10% on the individual position. Now, if you did 5 positions, then you would adjust it appropriately. So if you did 5 positions, that'd be 20,000 in each one of your positions. So then 1,000 of the 20,000 is 5%, if I'm not mistaken. So therefore, you would have a no more than a 5% stop loss from your initial purchase price if you're only doing 5 positions instead of 10. So you adjust your stops accordingly depending on how many positions you have and how much the overall portfolio value is. So that is going to be your max risk right out of the gate. Already stated, you know what it is, so that way set it to where you're comfortable with. Now, on the opposite side of things, when the stock starts to run up, this is really more of a personal preference, but you have to ask yourself and just be honest with yourself. You don't have to put it in a chat or anything, but genuinely ask yourself, what type of return on the individual position are you happy with taking? Maybe it's a 30%, maybe it's 50%, maybe it's 100%. Whatever that is where your profit target should be set at. Well, what happens if it doesn't get there? If you have a 100% profit target set and the stock only goes up 50% and then starts pulling back, are you going to let it give back all of that gain and wait till it hits that 10% loss before cutting it and letting it go? No. So here's the third rule of thumb, and this is by far the most important rule of thumb that you should be following. And we call this the 50% rule. Simply stating, anything over a 10% gain on an individual position, never give back more than 50% of that profit. So let's talk about that. I'll give a real life example that we had in the Jockey Club, I believe last week, if I'm not mistaken. I was doing the Jockey Club. I had one of my colleagues buy some contra ETFs. The market was going down. The contra ETFs were up anywhere between 10 to 20%. And so I looked at the market. I was like, with these current conditions, we already have over that 10% gain. I don't want to give back more than 50% of that. So what I did is I went and I adjusted the stop to a trailing stop, and I set a trailing stop of around 4 to 5%, less than that 50% rule, but still following no more than that 50% rule. So market started reversing course just a few hours later, and we ended up, instead of letting those contra ETFs turn into a loss, we ended up taking double-digit gains in a matter of a day or two on some of those positions. So with this current market environment, that is, that 50% rule can really help save your bacon. Because if you watch it, especially when the market can have, 1,000-point up days over the last few days, once you hit that gain, or once you hit that 10%, tighten up your stops. So that way, if we do start seeing the market start to head south again or start to gyrate in this consolidation, you're locking that profit in rather than risking it because, let's be honest, with all the macro environment issues going on currently, you could make the case that the market still has a lot more room to the downside to go. But then you have some analysts coming out saying that, because of where we're currently at, we could start seeing the Fed pivoting, and then all of a sudden the market starts rallying. And if you're short, you don't want to be caught in that short position if the market starts rallying. So that's why, if you have those rules in place, you have, let's say, this support floor down here at these lows, going off of this. Let's just use that for an example. So let's say that's your support floor. You're using those rules of thumb that we just talked about. Market goes up, start tightening up your stops. Market starts pulling down or it starts pulling back. You take your profits. Then all of a sudden, market goes up. Okay, make some money off of it. Market starts pulling back. Let's say you didn't actually adjust your stops accordingly and you let it go. Well, all of a sudden then it comes down, you think, oh, it's already bounced off of that support once. It's going to do it again. I don't need to adjust it. I'm just going to sit and hold on and just wait for it to continue to climb and come back again. Well, what happens if it doesn't? Then all of a sudden it breaks that support, starts nosediving like we saw earlier in 2022 so far. And then next thing you know, you're letting what could have been an easy 10, 15% gain turn into a 8 to 10% loss. So this is why, following that plan, having a plan in place is extremely important. VectorVest, I know I say it, I know Glenn says it, all of us here say it time and time again. Plan your trade and trade your plan. Don't go into a position without your plan already set up. What stops would you recommend? Options? Options, I would still follow the 10% rule or that, the 1% maximum rule. I would still set, the 50% rule. And then your target of whatever your target would be. So whether you're trading options or stocks, these money management rules would be applicable to both assets or equities there. Dr. Bonnie, is this recorded? Yes, it is. So if you can't stay the whole day, I completely understand. You can always come back and check it out on our YouTube channel and watch the replay after the event. What about Tesla, Netflix, Google? How much percent? Because the swings look at Netflix, I got out at a loss and I lost 60 points up. So Bill, doesn't matter what stock it is. As long as you're dollar weighting your positions like you should be, then you will always use the same money management per those positions. It's when you start putting different dollar amounts into each position, that's when you start to make mistakes, or you try to get overweighted in one position. And then if that one position ends up going against you, like it did with Archegos, then that one position can wreck your whole entire portfolio. So as long as you're evenly weighting your positions, it shouldn't matter what the stock name is, you still treat it the same. Now, I will say this. We talked about setting yourself a target. If you're somebody who's out there that's, more of that longer term investor, let's say you're more comfortable with setting that 100% mark for your profit target. Well, in these current environments where we see the market rallying 1,000 points up, then dropping 2,000 points down, you need to make sure you are up to date with what's going on in the market, the current market environment, and adjust your plan accordingly. So what I mean by that, instead of setting yourself a target for 100% when we're seeing what we're seeing in 2022 so far, maybe set yourself a target for 30%. Maybe set yourself a target for 20%. Rather to go with that old baseball reference, I'd rather get a walk on and, load up the bases one at a time, taking single after single after single, than just try to hit that home run every time. Take those small wins, especially in this current environment. All things go up and all things eventually go down, but what goes up must come down. What goes down must go up. So eventually this bear market will end and the markets will start moving higher and we can go back to, business as usual. But for the short term, right now is the time to take these small wins, add that cash to your portfolio. So that way, when that official bottom does get marked and we do start seeing the market higher or moving higher, you have more cash to deploy to compound your rate of return to give you better returns in the overall market. So that is why, we need to stay disciplined first and foremost, but also why we need to adjust our plan accordingly for the current environments. And don't be afraid to take the small wins instead of trying to hit the home run every single time. Do you suggest the same technique for mutual funds? Well, Driss, so with mutual funds, it's a little bit different. I haven't really messed with mutual funds in quite a while. But when I was looking at mutual funds, they had a lot of their fees were a lot higher to get in and out. So you have to take into account the fees. And so therefore you're usually looking for the longer term trends on those. But still, if it's going against you, you want to make sure that you're still protecting your money, your hard-earned money, and not giving it all away. So you still want to have some sort of stops or some sort of money management rules in place for that, but adjust it accordingly for that type of asset there. So it would still be applicable, maybe not exactly to that degree, but having some sort of money management rules would still be prudent of you for no matter what you're trading there. Are you dissing Aaron Judge with that strikeout comment? No, not today, Jay. Not today. I woke up on the right side of the bed this morning. I didn't wake up and choose violence this morning. Even worse when you get RSUs from a company as you're completely overweight. Exactly. Best advice ever. Thank you. So yeah, also there's over almost 120 of you and we only have 35 likes right now. Go ahead, take a second, smash that like button. Doesn't cost you a thing. Supports the channel, supports these streams. So if you guys are enjoying yourself, make sure to do so right now. We need to have everybody chatting, liking, sharing our videos, especially going into next week. So that way we have that momentum going into trading for charity. So if you haven't already, make sure to do so right now. All right. So looking at it though, right now, markets are consolidating. Adjust plans accordingly. Tighten up your stops. Instead of saying, all right, I'm going to set that 1%, going back to that example, 1% rule on $100,000 with 10 different stocks. So that would be a 10% stop on those positions. Well, in this current environment where you have these big ups, big downs, big ups, big downs, don't do 10%. In these cases, you're not deploying all of your cash, all of your capital. You're usually just taking a couple of positions, nibbling a little bit here and there. So therefore, instead of doing, let's say 10%, maybe do 6-7%. So that way, if you're wrong right out of the gate, you're not taking as big of a loss. Once again, keeping more of that cash rather than giving it a full 10%. Keep more of your cash on the sidelines. So that way, if it does quickly turn like we've seen, you're minimizing that loss quickly, getting out and moving on rather than letting it turn into a bigger issue. We can easily come back from a 4 to 8% loss in an individual trade. We cannot easily come back on the portfolio when you have a 30, 40, 50% loss on an individual position. To give an example, I like giving real examples because it helps people, understand how important this is. But to get into it though, in the Jockey Club, I know I talk about it a lot, but that's where I do a lot of live trading. And so everything can be verified there. It's one thing to say, oh yeah, my personal portfolio that nobody's ever seen, I've done this, this, and this. It's another thing to be able to use an example that has been verified and people actually can back up there. So in the Jockey Club, I've had in one portfolio, I'm not even including the big trade I had, just in one portfolio, I have had 5 trades in the last 3 weeks. I've had 4 out of 5 winners. The one loser that I had was I cut it at 4.7%. Even with that 4.7% loss on that one trade out of 5, the overall portfolio is up 11% in 3 weeks. So in this current environment, over 10% in less than a month, not a bad return. And that's only using one position at a time. So I'm only deploying about 10% or 1/5 of my capital in a position at a time. So yeah, there's definitely merit to having discipline on your money management rules and sticking with those and adjusting them accordingly. Because if you can cut your loser quickly, that allows your winners to thrive. And that's really how you continue to move that portfolio higher, building that nest egg and building your wealth over time. Gum Doctor asks, can you describe a follow through day? For example, the green light buyer RT kicker is up back a couple of days. Thanks. Sure. Let's go ahead and take a look at that real quick. What is that club? So it's a Jockey Club. It's our live trading room we do for our Derby subscribers. Every Monday through Friday from 9 a.m. until about 10:30, where we do, there's 3 different instructors, myself included. Glenn is another one. And then Steve Chappell, he's our manager of trading systems development. All 3 of us have pretty unique or different investment styles. I'm by far, I think we can all agree upon this, I'm by far the most aggressive. I do a lot of the day trading in the Jockey Club, so I host on Tuesdays. And when I get in there, especially in these current environments, I prefer having cash sitting on the sidelines every single day at the close. So I like taking advantage of these markets by day trading rather than trying to swing trade them. So I'm not affected by what could potentially happen overnight. But it's our Jockey Club. It's our live trading room. We do aggressive day trading to swing trading and pretty much anything in between. So yeah. If you're interested, you can either ask in the comments, ask everybody here. I know there's a few Jockey Club members in here right now. I'm sure they'd be, willing to attest for it. Or you can always give our support a call. They can help you out with that as well. All right, so getting into Gum Doctor's question, what is follow through? So going into it, as you said, on October 18th, we had that green light. We had the RT kicker combo timing signal. But what happened the next day? Well, let's go take a look. Taking a look at the VectorVest composite, put on a 1-week chart. So October 18th, we had that green light because we closed higher. But then the next day, on October 19th, we opened up lower and continued to move lower. Therefore, we didn't have follow through on that. Follow through is pretty much the good general rule of thumb is 30 minutes to an hour after the market opens. We want to see all 3 major indices, the Dow, the NASDAQ, and the S&P, all climbing higher about 0.5% or so over that time frame. So if they open up, at 1% or higher, then markets are usually running a little bit too much. And so it's going to take a little bit for the markets to, the markets kind of get ahead of themselves. So that's not really the follow through we're looking for. So we're looking for a steady open in the green, and then seeing the major indices moving steadily higher for that first 30 minutes to an hour. So hopefully that answers your question on what to look for follow through. Jockey Club is great. Appreciate that, Jay. Thank you. All right. So do you guys have any questions on money management, stops, knowing when to take your profits, what to look for to know when you should start adjusting your plans? You know, one of the easiest ways to know when you should start adjusting your plans, once again, right here on the homepage, watching that daily color guard report. Every single night we recap what's going on in the market today, what to expect for tomorrow, what news you need to be aware of, what headlines you need to be prepared for the next trading day. With that, or watching that quick video there, will make sure that you're up to date with what's going on in the market. So if we start getting into these conditions, we'll point that out for you, so that way you can start adjusting your plan accordingly. So I can't stress it enough. If you're not watching that daily color guard report on a nightly basis, make sure to do so. It's a tremendous help to get you on the right track here. What crazy markets have been opening green but then reversing or getting punished towards the end of the day? Well, Sadiq, not really. They're not really getting punished towards the end of the day. If you're talking about, what was it, Tuesday, getting back into it. What was it, Tuesday this week? We had that big up day. Today's Thursday. There's Wednesday, Tuesday. Yeah, market's pretty much gapped up. It's hard to tell. I'm trying to remember which day exactly it was. So Thursday, Wednesday, Tuesday, Monday. So yeah, Tuesday it was. Tuesday, the markets opened up extremely high. All the major indices were 2 to 3% higher. And you know, I stated it in the Jockey Club. Whenever you see the markets opening up that high, usually the market tends to get a little bit ahead of itself and has to sell off because they blew past a whole bunch of buy orders. So based off supply and demand, if there's no demand at those current levels because everybody was setting their buy orders down here and then, you know, they're trying to start up here, you have to come down a little bit to meet in the middle. So that way you can start getting to those buy orders that were placed the previous day to start getting those filled. So, you know, whenever you see the markets gapping up 2 or 3%, be careful because it's rare to see the markets open up that high and continue to climb higher. So, hopefully that general rule right there should help you out. How was NKO earnings? I don't know. How were they? These volatility stops. Yeah. I mean, use what stops you're most comfortable with. That's by far the best criteria you could possibly stick with. Or up at 4 a.m. only to turn red upon the open at 9:30. Yeah. Pre-market majority of, or actually I saw an interesting study about that, Maria, where over the last decade, it took pre-market movement and compared it to market hour movement. And it was some astronomical number. I think it was 80 or 90% of the gains that we've seen over the last decade in the bull market that we've been in all came from pre-market. So yeah, you know, that's why the buy and hold style of mentality is such a positive, because you're not missing out on those big gaps up and big gap down, or big gap ups. But at the same time, I thought that was interesting to see, you know, that statistic. It was somewhere around 80 to 90% of the gain that you've seen over the last decade has come from pre-market or after hours trading. Is there any video on money management? Yeah, this one. Or John, we've joking aside, we've also done a lot of live streams here on our YouTube channel, specifically addressing money management, knowing when you should start setting stops, or knowing when you should start, you know, adjusting your trading plan or adjusting your stops. Yeah, we've done a lot of those over the years on money management. Market is sensitive period. News is affecting more than usual, hence high volatility. Yeah, the VIX trade is something for years, I've stayed away from VIX. Really since about 2012, I think was the last time I've really, considered trading the VIX. But looking at the current environment, VIX trade is definitely tempting. I'll say that at the least. Did Nokia report a profit? Actually, with that, that'll be a great transition. Let's go ahead and jump into the fan favorite and start analyzing any stock that you guys want to take a look at. So we'll start off with Nokia. NKO. Oh, Nokia. What's Nokia? Actually, I can just do it this way. NOK. So I think that's the one you were trying to ask about earlier instead of NKO, NOK. And then tap on the three little dots in the upper right hand corner. Go to stock news. Let's find out together. I would say no. Down 5.37% so far. Going into the headlines down here. Post forecast. Beating net profits. So Nokia quarterly operating profits lag. Expectations as margins drop. Quarterly operating profit below market expectations. Compared to the operating profit, blah, blah, blah. So here you go. There's all your answers right here. Getting out of here. All right, but analyzing Nokia using the simple VectorVest methodology. Starting off, looking at the four indicators down here at the bottom. As always, these four indicators are going to be cast on a scale of 0 to 2, and above 1 is good, below 1 is bad. That's literally as hard as you need to make it. The first one we're looking at is RV, or relative value, which is looking at the long-term potential of the stock over the next 1 to 3 years. At 1.12, Nokia has decent long-term potential over the next 1 to 3 years. The second indicator is the RS, or relative safety, which is looking at how much risk is involved with this stock compared to the average stock out there. Since it's below 1, that tells us there's more risk with this stock than the average stock out there. Third, RT, or relative timing, the short-term price trend of the stock. Below that level of 1 tells us this stock is in a downtrend. The combination of these three get comprised to come up with our master indicator VST, standing for value, safety, and timing. Since that's below 1 as well, this stock is poor on both a fundamental and a technical basis. Simple as that. But now, let's see how fast this can really make investing. So, getting into our next one, DVN. Devon Energy. Good long-term potential, a little more risk than the average stock out there. It's in an uptrend. Overall, the stock is favorable. Literally, less than 10 seconds, and I have enough usable information to make an informed decision on that stock. I'm not spending hours going through data and data sheets and spreadsheets and all that. Less than 10 seconds, I already have a good idea of whether or not this stock is worthwhile for me or not. Let's go ahead and take a look at the next. SQQQ. So with an ETF, or any ETF that VectorVest tracks, we make it simpler than anywhere else out there. Because it doesn't report quarterly earnings, they don't have balance sheets and financial statements. The RVRS indicators, the two fundamental indicators, are always going to be pegged at 1. So therefore, all you really have to do is look at the RT, or relative timing. At 1.47, even though it's down here today, on a short-term basis, SQQQ is still in a strong uptrend. So overall, stock is favorable. DRV. Once again, another ETF. Therefore, look at the timing. 1.76, really strong short-term uptrend. Therefore, this ETF is favorable. Gush. Looking at Gush, another ETF. Looking at RT, 1.79, really strong short-term uptrend. Therefore, Gush is favorable currently. SGML. Great long-term potential, but a little bit more risk associated with it. Really strong short-term uptrend, so overall, stock is definitely favorable. Let's get some over from our Facebook side. So LCID, poor long-term potential, a lot of risk associated with it. It's in a steady decline. Overall, the stock is not favorable. CHK, Chesapeake Energy, great long-term potential, a little more risk associated with it though, in a really strong short-term uptrend. Overall, stock is favorable. EQT, good long-term potential, less risk associated with it. You are in a steady or a short-term decline. Overall, it's a good stock, but with the timing off, right now is not the time to be holding it long. AR, great long-term potential, a little bit more risk associated with it. You are in a strong short-term uptrend, so overall, stock is favorable. TSLA, looking at Tesla, good long-term potential, less risk associated with it. However, you have been in a steady decline on a short-term basis, still in that steady decline on a short-term basis. Overall, it's a good stock from the fundamental side, but timing side tells us right now is not the time to be holding it long. VLO, good long-term potential, less risk associated with it, really strong short-term uptrend. Overall, stock is definitely favorable. WTI, I see a pretty common trend here. A lot of people putting in a lot of oil energy stocks, no surprise. Tells me who typically comes to our streams and who doesn't. WTI, good long-term potential, but does have a lot of risk associated with it. Really strong short-term uptrend. Overall, the stock is definitely favorable. PBF, good long-term potential, less risk associated with it, really strong short-term uptrend. Overall, stock is definitely favorable. Nokia has been in a channel since I've been with VectorVest, going on 3 years. Good to know. VIST, let's take a look. Another energy stock, surprise. Good long-term potential, does have a lot of risk associated with it though. You're in a really strong short-term uptrend, so overall the stock is definitely favorable. CROC, CROC. Crocs, good long-term potential, a little less risk than the average stock out there. You are in a short-term uptrend. Overall, stock is favorable. AAL, good long-term potential, but does have a little bit more risk associated with it. Timing is basically flat. Overall, stock's a little bit better than average, but not much. SMCI, good long-term potential, less risk associated with it. You are in a slight short-term uptrend. Overall, the stock is favorable. Preferably, I'd like to see that RT pick up above that level of 1.1. PED, which is oil and debt-free with 26 million in cash. PED, good long-term potential, but there is a lot of risk involved in this stock though. You do have a short-term uptrend. Like you said, it's in oil, so no surprise there. Overall, it's a good stock right now, but it is more of an aggressive play. There are definitely ones with better balance sheets in that field, but doesn't mean you can't make money with this one for the time being. KOLD, RT, 1.86. Really strong short-term uptrend. So overall, this one is favorable currently. On options, I'm reluctant to use an actual stop. Instead, I often use time stop and keep my eyes on the market. So David, one of the things I will say, and I've talked about this in the past before, some people need to put that stop in with their broker so they can stay disciplined. Some people, myself being one of those people, have worked hard over the years to discipline ourselves so we can, have a mental stop. When that stop is met, we go and we close that position. Some people don't have, or some people, second guess themselves and don't actually commit whenever that stop should have been closed out. They don't actually go in and do that. And that's when, those are the type of people that need to just set stops with their brokers. I personally, use mental stops. I write them all down. So that way, whenever that price, I already know what price that is. Whenever that is met, I'll go in and just close it myself. I'm okay with that. But I know a lot of people don't have that ability to do so throughout the market hours. So setting stops up with your broker could definitely be a viable opportunity there as well. It really depends on, or really comes down to, how disciplined you can stay and be honest with yourself about it too. How much time you can, afford to look at the markets throughout the day to check on those. Those sort of things are really what makes it, dependent on what type of stops or how you should be using stops or how you should be setting stops. BITO. RT is at 0.78, telling us it's still in a steady decline. Therefore, the Bitcoin ETF is not favorable right now. BAC, good long-term potential, a little less risk than the average stock out there. You are in a short-term uptrend. Overall, the stock is currently favorable. UNH, good long-term potential, less risk associated with it. Really strong or steady, strong short-term uptrend. Overall, stock is favorable. Could you please elaborate on what goes into the relative safety exactly? Example being Tesla with a high safety rating, but is trading really high PE wise. Going into the stock analysis report, coming down here. Relative safety, computed from analysis of the consistency and predictability of company's financial performance, debt to equity ratio, sales volume, business longevity, price volatility, and a few other factors. There's more there, Westmere, in the green book from our founder, Dr. Delito, that he goes into more detail about it. But, the easiest way that I always tell people is, look at earnings. Are earnings steadily rising quarter over quarter, year over year? If they are, look out a little bit further. Have they been able to consistently do that for the last 5 years, the last 10 years? The stronger that consistent earnings performance is, the stronger the RS rating is typically going to be. That's, in a very simplistic fashion, that's the best way of looking at it there. Let me make sure I got them all. USLG. We'll do a couple more and then we'll start winding it down for the day. So USLG, poor long-term potential, a lot of risk associated with it. You are in a steady decline. Overall, the stock is not favorable. Ravi, I know I already did DRV there, but we're going to do a couple more and then we're going to wind things down. If I didn't get to analyzing your guys' stocks, as always, if you are a subscriber, simply pull up the mobile app, tap on that magnifying glass, type in your symbols, and you can do the same analysis wherever you're at on the go. If you're not a subscriber, click on the link in the description of today's video. Sign up for the 2-week free trial. Put it to the test. Seeing is believing there. BITI. Let's go ahead and take a look at that one. BITI with an ETF, a contra ETF on Bitcoin. RT at 1.24 tells us it is in a steady short-term uptrend. So overall, this one is favorable. Is the trading for charity YouTube link updated yet? No, Jay. Still waiting on approval before we can release that. With the partnership, I have to make sure everything is approved before we can make it official there. So that will be coming in. Hopefully very, very shortly. I've done a few of those, Robert. I've done. Except for like 3 of them. I've done all of them except for like 3. And we'll do one more here. DFEN coming from the YouTube or the Facebook side to make sure Robert stays happy with that one. DFEN, another ETF. Therefore, your primary focus is RT. At 1.11, it is in a steady short-term uptrend. So overall, this ETF is favorable. Once again, thank you all for hanging out with me. Don't forget, starting at noon Eastern next Tuesday, we have Trading for Charity event, our second annual Trading for Charity event, where we're going to be raising some money for Levine Children's Hospital with your guys' help, the VV Nation community. I can't do it without you guys. So I need to see the awesome community that we saw last year. Really, really excited about this year's event that we have coming up. But make sure to tell all your friends, all your family about it. So that way you guys can all be there, learn how to trade successfully, see some live trading, make some money along with me, and also help raise money for a great cause there. Looking at the homepage though, the Dow is now up about 0.8%, NASDAQ's up about 1.1%, S&P up about 0.6%, VectorVest Composite up about 0.5%. So major indices are pulling back a little bit from where we first started the session off here today. But even though they are pulling back a little bit, we still have one tick into the green. Therefore, the market is mildly bullish, and VectorVest advocates caution when buying stocks at this time. If we scroll down, taking a look, still have that green light in the price column. Looking at the advanced declines, 63% of stocks moving higher, 25% of stocks moving lower, clearly meeting that 2-to-1 bias. So therefore, we still have a strong confirmation of that green light we see in the price column, the color guard for now. But if you're more prudent to conservative, as always, we're going to wait to see if the day can finish off green and then wait for that follow through tomorrow. If you're aggressive, maybe you start nibbling today. Just depends on your personal risk tolerance and different strokes for different folks. So on that, it's been my pleasure being with you guys. Don't forget to go show Glenn some love at 2 o'clock Eastern today for his Trending Thursday, where he talks about all the major headlines that are having an impact on the trading session and what to keep an eye on going forward. So thank you all once again for coming and hang out. Have a great rest of your trading day. Take care. Be safe out there. And I will see you guys next week. Toodles.